Assalamualaikum and good morning to my beloved lecturer, Madam Hasma Laili binti Jamal Lurus, and to all my friends. My name is Hawa Najwa binti Abdul Rashid. Today, I would like to show my video presentation for subject Islamic Finance FIN546. Okay, Islamic Finance is an ethical banking system and its practices are based on Islamic Sharia law. Interest is completely prohibited in Islamic banking. It is asset-based financing in which trade of elements prohibited by Islamic is not allowed. For example, you cannot take a loan for a wine shop. Okay, for the history of Islamic banking the first instance of Islamic banking came into the picture in Egypt in 1963. In 1970, several Islamic banks came into existence. First is Dubai Islamic Bank, second the Faisal Islamic Bank of Sudan, third the Bahrain Islamic Bank. Okay. Next is the principle of Islamic finance, which are first Sharia law and value that are comprehensively guide individual in ritual and non-ritual life. Second, dealing with haram, unlawful services and commodity such as gambling, liquor are prohibited. Third, contract should be based upon profit and risk sharing and in the form of buyer, which is seller murabaha, lessee ijarah, partnership musyarakah, and debtor creditor is qad hasan in relationship. Okay, the expectation from Islamic bank are more ethical business economy, better governance due to participation of investor, debt holder in risk sharing, less uncertainty and less transaction cost, less speculation, and lastly is Sharia business deals only on real sector, which is goods and services, so that it will add economic value. Okay, what are the factors which make customer in Islamic banking? First is interest-free loan. Second, financial position of bank. Third, Islamic teaching and Sharia. Fourth, knowledge on Islam and religious environment in the city. Fifth is economic benefit and better facility. Okay, next are the services and product of Islamic bank. First is partnership based on mode of financing. Second is musyarakah finance, mudarabah finance. Third is trade-based mode of financing. Fourth is murabaha finance, salam finance. Fifth is rental-based mode of financing. And lastly is ijarah finance, diminishing musyarakah finance. Okay, for the Islamic finance structure in Islamic finance, while income and pricing remain important, there is also consideration on why a product is launched and the impact it has on the customer. Not all fee can be charged and not all feature can be used in Islamic finance. The Islamic finance itself is not a stand-alone arrangement. Okay. For the sources and application of fund of the Islamic finance, first is treasury, which means manage liquidity end-to-end, invest in compliant instrument and manage cost of fund. Second, operation, which means detailed work stream, commodity desk and sequencing and akad completion. Third, legal, which means contractual relationship, akad and transactional document, and Islamic terms and conditions. Fourth is Sharia review and audit, which means execution of document, completion of akad and Sharia non-compliant event. And lastly is Sharia committee, which means deliberation of new product and issue, decision on SNC event and approval of product, process and structure. Okay, next is the objective of Islamic finance are the key challenge in Islamic finance is the balance between the maqasid, which is objective of the Sharia, and business need. Additional Sharia requirement become a risk for the bank, fail to be observed, inadequate control, human error, and wrong understanding of requirement often lead to Sharia non-compliant event. Okay, what are the Islamic finance product? First is Al-Quran, second Sunnah, third Ijma', fourth Qiyas, and lastly is Ijtihad. Okay, next is the Islamic financial system, which are: first is comprehensive Islamic financial system covering all the financial sector. Second, diversity of player, which is 12 full-fledged Islamic banking institution with 9 takaful operator. Third is sound and robust Islamic financial institution governed by international best practices. Fourth is rapid growth with the wide range of product and services. And lastly is internationally integrated with international Islamic financial system. However, in other side, what are the principles of conventional? First is man-made principle, second debtor-creditor relationship, and third is interest. Okay, what is the conventional? The function and operating mode of conventional bank are based on fully man-made principle. It also, the investor or lender is guaranteed of a predetermined rate of the interest or return. It's also unrestricted profit maximization, illustrated by derivative trading. It also does not deal with zakat, and is also lending money and getting it back with compounding interest in the fundamental function of the conventional. Money is a commodity and motivation. It can charge additional money, penalty, and compounded interest in case of defaulter. For interest-based commercial bank, borrowing from the money market is relatively easier. Relationship is often defined as that of creditor-debtor. Okay, next is conventional structure. Conventional modus operandi is: first, shareholder give capital; second, bank receive customer deposit and invest; third, interest received are distributed; fourth, customer request for loan; fifth, bank borrow interbank fund; and lastly, customer pay interest with the principal. Okay, next are services and product offered by conventional. First is bank are in business to earn a profit; second, bank are regulated; third, loan; and lastly is saving account. Moreover, factors which may attract the customer are: first, better product and services; financial position of bank; third is latest facility; fourth is interest on deposit; fifth is strong global image; and lastly is reputation and economic benefit. Okay, in my opinion, the preceding discussion make it clear and is that Islamic banking is not a negligible or merely temporary phenomenon. Islamic banks are here to stay, and there are signs that they will continue to grow and expand. Even if one does not subscribe to the Islamic injunction against the institution of interest, one may find in Islamic banking some innovative idea which could add more variety to the existing financial network. In conclusion, Islamic finance revolves around justice and morality. It is very young concept in modern times, yet it is emerging as one of the fastest growing area of international finance. Not deal with riba, thus avoiding Allah, angel, and war. Islamic finance as a discipline has evolved both theoretically and empirically. It has emerged as a heavily proactive and dynamic branch of economy. In order to be a viable Islamic finance, all the basic elements toward this purpose were being established by the authority. Thank you.